Hello guys and welcome to my way to fire. Let's have a look at the situation the stock market is in right now. The S&P 500 is at an all-time high and so are the Dow Jones and Nasdaq. So should you be investing right now? Should you buy into this at these high prices or just wait for a crash? Before I get into that, don't forget to hit the like button to support the channel if you like this type of content. First, let's talk about the current situation we are facing right now. I will start with the bad things, which should make you cautious a bit and could lead to a possible dip from the highs we are experiencing right now. The inflation is the highest it has been in decades. All those stimulus checks handed out and government spending come at a cost. Also, with the Fed printers running and the money supply rising, inflation is very high right now. Unfortunately, the pandemic isn't over yet. With the new Omicron variant spreading, we experience a rise in positive tests, although so far it seems to have milder effects, so let's be hopeful it gets better. On the other hand, we can see some optimism. The unemployment rate got under 4% in December, which is great after it skyrocketed in 2020 when the closing began. It is almost back at the pre-COVID level. The interest rates are still very low, which encourages spending and is meant to help the economy, but the Fed also announced that it will start to increase the interest rates little by little. For some that might be bad news, but it should help to battle the inflation and help to get it under control to a more reasonable level. That should also impact the housing market as the mortgage rates will go up as well, so that will be something to watch how it turns out. When talking about waiting for another market crash, let's explain what that even is. Market crash is a big drop in stock prices. But not just any drop, it has to be significant, at least in the double-digit range. The famous crashes include the Great Depression, Black Monday, dot-com bubble, 2008 financial crisis, and the latest COVID-19 pandemic. Those crashes range anywhere from 20% to over 50%. During the last one, the stock market wrote off around 30% from the previous high on the 14th of February till the lowest point on the 20th of March. Even though we witnessed this crash at the beginning of the year, the market recovered rather quickly. It actually ended the year in green and got even higher than it started. Unlike the previous financial crisis, which lasted much longer. That one was caused by the subprime loans handed out left and right and eventually the burst of the housing bubble. So if we're at the all-time highs again, is it the right time to invest? Right now there are many stocks that seem to be overpriced and unreasonably high. That said, you have to be much more careful when searching for the right ones to buy. I personally like to buy dividend stocks as well as investing into ETFs. But as I said, good deals are harder and harder to come by. So what am I doing right now? I keep adding into my ETF position every month. If I happen to find a good stock for a good price and have some extra money, I would of course buy it. But why am I buying more, even though I just said we are at the all-time high? Because nobody really knows if we are also at the top. There was an all-time high couple months ago too, and look at it now. We are even higher. Had I stopped investing before, I would have missed out on all of the gains until now. So is the crash coming or not? I honestly have no idea. And let me tell you something. The others don't know either. Sure, you can read an article that says the crash is near. The thing is that if so many people say it, someone just has to be right. That's why after every crash someone who predicted it appears. Does it mean he can do it again? Probably not. I firmly believe in this sentence, time in the market beats timing the market. It means that investing regularly and keeping the money invested works better than trying to wait for the bottom to buy. That is because it is so hard to predict the bottom. If the stock market starts going down, how do you know that it will not go even lower? Or the opposite, what if you keep waiting, but it decides to go back up instead? You could try the services of a fortune teller, but dollar cost averaging might be a better option. There are even studies and examples of what happens to people who keep investing regularly and to those who actually manage to time the market. One of those examples shows a person who only invests when the stock market crashes. It takes into account the last 5 crashes. It even states that the person really hits the sweet spot and invests at the very bottom in each of those 5 times. Apart from that, he sits at the side and keeps the money in a savings account. The other person invests the same amount every month, sometimes at the top, sometimes at the bottom, other times somewhere in the middle. After the same time and having invested the same capital, the second person ends up with more money than the first who hit the timing perfectly all 5 times, which is already super unlikely. How is that possible? Even though the first one managed to get it right, his money sat in the savings account most of the time, losing its value to inflation. On the other hand, The second person takes full advantage of the compound interest and lets the portfolio grow faster. Guys, if you don't know what compound interest is yet, then make sure you watch my previous video where I explain it. If you are serious about investing, you really want to know how compound interest works. I will leave the link in the description, so make sure to watch it. But what should you do when the market crashes? Because it will eventually happen again someday. It is important to be prepared and ready to take advantage. Do not panic. First off, you want to have an emergency fund. Use some savings account to make one. Generally speaking, 3 to 6 months worth of expenses is advised, but it depends on your preferences. You want to have this at all times, not just in the event of a market crash. It's a nice cushion in case you lose your income. It is especially important so you don't have to sell your stocks if the price goes down. When the market drops, you do not want to sell. I'm not sure I have to say this, but buying high and selling low is a terrible strategy. Instead, you are prepared with your emergency fund. If your income remains the same and you are doing fine, then even better. Think of the situation the same as if you go shopping and your favorite snacks are on sale. You can afford more now. The situation is actually pretty similar. The company didn't stop making their products and might not have lost its value. This can't apply to every stock, as the COVID crisis showed us and hit the travel industry really hard. But generally speaking, it's a great chance to get some companies for an awesome price. There are many great companies I would like to buy shares of, but the price doesn't seem reasonable right now. Should they get lower, I would definitely like to add them to my portfolio. Warren Buffett says, "Be fearful when others are greedy and greedy when others are fearful." Apart from picking individual stocks, I also invest into ETFs, which are great to do exactly what I described before. I practice what I preach, so I add to my position every month. Each crash lasts differently, so be patient and do not sell, unless you really have to. If you lose your income, have your emergency fund ready and try to cut back on expenses as much as you can. To give you an idea of how long the previous crashes lasted, here goes. Black Monday lasted 101 days, 1990 crash lasted 87 days, .com bubble 768 days, that's long, but at the same time it gives you lots of opportunities to buy cheap. The financial crisis lasted 514 days and the COVID-19 only lasted 33 days. That was really quick one, and as I said, the market actually managed to not only recover but to end up with some serious gains at the end of the year. So the main takeaways from this video are, don't panic, have an emergency fund ready, do not sell unless you really have to, invest regularly, and remember, time in the market beats timing the market. Guys, if you enjoyed this video and found it helpful, please hit the like button to support this channel, and if you are interested in more videos about investing, personal finance and just overall money related topics, then make sure you subscribe. As always, thank you so much for watching, and I hope to see you in the next video.